What's up, Internet? It's your boy, Todd Snow. In today's video, we're going to be taking a look at the 50-year mortgage. That's right, old Donnie down in DC has got the policy pen in his hand again, and this time he's aiming at addressing affordability in the real estate market. So in this video, we're going to look at some pros and cons and see if it's just some silly policy or if it has some actual practical application for buyers. But just in case you didn't know, I am a licensed real estate agent in the state of New York. So if you're looking to buy, sell, or invest in the area, hit me up at toddsnow@kw.com. Links in the description down below. Let's get into the video. Alright, boys and girls, buckle up, because old Trumpy's at it again. This time he's floating the idea of a 50-year mortgage. Yes, you heard that right. Half a century. As a part of his housing policy discussion, this mind-boggling long mortgage term would be a major plot twist, especially compared to the 15 and 30-year options that most Americans know and sometimes love. In this video, we're going to go ahead and break down the possible perks and pitfalls of a 50-year mortgage for buyers. Because if you're going to commit for 50 years, you better know what you're getting into. And here's a little spoiler. This mortgage will outlast your favorite Netflix series, and will outlast your car, and possibly even your hair color. Alright, in this section we're going to take a look at the possible benefits that this 50-year mortgage could have for home buyers. First of those things is lower monthly payments. Think of the 50-year mortgage as the marathon runner of home loans. Pacing itself nice and slow. By extending the loan repayment period over half a century, your monthly payments shrink down to bite-sized portions. Suddenly you don't have to choose between making your mortgage or splurging for that extra guac at Chipotle. This could make the American dream of home ownership much more accessible, especially for first-time buyers or for those of us whose incomes are a bit more modest than our ambitions. It's almost like the housing market's version of layaway, except you get to sleep in the product. Another potential benefit that the 50-year mortgage could offer is increased cash flow. And let's be honest, who couldn't use a couple of extra bucks at the end of the month? By stretching out those loan payments for 5 decades, it would mean that less of your paycheck gets sucked into the home loan vortex each month. This leaves a lot more room in your budget for other priorities, like saving for retirement, starting a college fund, or finally subscribing to all those streaming services that you're borrowing passwords for. Now listen, financial flexibility is great. Just try not to spend all those freed up dollars on impulse buys from late night infomercials or unnecessary home improvements. In this section, we're going to take a look at some of the potential pitfalls of a 50-year mortgage. And the first of those is be prepared for a significantly higher total interest paid. If you're down to take the long ride and have the 50-year mortgage sitting shotgun, you better buckle up. While lower monthly payments may sound like music to your wallet, the long-term tune is a ballad of ballooning interest. Over 50 years, you're going to pay interest like it's going out of style. By the time you make your last payment, you might have shelled out enough in interest to buy a second home. The bank might even send you a holiday card every year just to say thanks for your generosity. Because compared to a 30-year note, the total interest paid on a 50-year term can be staggering. Not quite buying a small island money, but I think you get the idea. Another potential downfall to the 50-year mortgage for our home buyers out there is you are going to be building equity at the slowest pace in human history. If you're hoping to build equity quickly, the 50-year mortgage could feel like chiseling Mount Rushmore with a butter knife. In those early years, most of your payments are just paying off the interest. You're not even touching the principal. It's a bit like joining a gym and only ever using the vending machine. I mean, sure, you're making progress, but not in the way that you want. Your stake in your home grows at a snail's pace. which means it could be decades before you even own a respectable portion of your own living room. So there you go, that's some of the ups and downs and in and outs of this 50-year mortgage deal. That's if it even comes to fruition. But if it does, it could make homeownership more attainable for some by lowering monthly payments. But buyers should carefully weigh the long-term financial implications, including the much higher total interest paid and the slower equity growth. But as with any major financial decision, it's important for buyers to consider their personal financial goals, their stability, and the potential risks before committing to such a lengthy mortgage term, or committing to any mortgage term for that matter. And always, always, always do your homework and consult a professional. So hopefully you learned something, hopefully you like, hopefully you subscribe, and don't forget, I am a licensed real estate agent, so if you're looking to buy, sell, or invest in the area, go ahead and hit me up at toddsnow@kw.com. Thanks.